Just a few days ago, Michael Burry submitted a 13F form to the Securities and Exchange Commission, disclosing all his positions, old and new. After selling almost everything earlier this year and betting the whole ranch on Geo Group, a company that invests in private prisons, Burry seems to have doubled down on his vision. So what stocks has he bought, and why? Before we get into the nuances of his strategy, let's remember why Michael Burry is one of the most well-known investors of our time. He gained notoriety for foreseeing the 2008 housing catastrophe and benefiting from it. From its start until its closure in 2008, his hedge fund generated profits that roughly 150 times beat the S&P 500. That's not all, however. He also profited by betting against the 2021 tech bubble. Among other things, he shorted the ARK Innovation Fund and Tesla. He also invested in the GameStop story as one of the first investors. Before the brief squeeze, he purchased shares at around $2. And this year, he attracted more media attention when he sold almost all of his holdings, including Meta, Bristol Myers Squibb, and Cigna. And once again, his timing couldn't have been better as the market started to decline shortly after. Meta, in particular, fell extremely hard. He didn't, however, sell everything. He only held one stake, which belongs to the real estate investment company, Geo Group. It was once REIT and focuses on owning and operating private jails and mental health institutions. Burry has just taken an even bolder position in Geo, as revealed by his hedge fund's latest portfolio disclosure. But that's not all. Burry's made a massive move with one of Geo's biggest competitors, and we've got you covered on all the most important aspects of Michael Burry's new portfolio strategy. So sit back and be sure to watch to the end as we'll cover all of Burry's surprising new acquisitions that even he believes will do well during a big recession. Part 1. Is the sky falling? Burry, who predicted the 2008 financial disaster before anybody else, feels a deep distrust toward the market these days. He's jumped to Twitter many times to warn investors that the stock market disaster is just getting started. Meanwhile, Burry emphasized the Federal Reserve's quantitative tightening program, which went into force earlier this year. Burry also said that the current breakdown may be worse than the one in 2008. What interest rates are doing, global exchange rates, central banks seem reactive and in SIA mode, Burry said. This may be the most blaring warning shot yet for investors hoping for a fresh bull market. The best bear market forecaster of all time is completely pessimistic on this market. What exactly is he thinking? And most importantly, should you listen to him? Let us now address those concerns. Part 2. Michael Burry sells everything. Michael Burry has a sizable stock portfolio heading into the second quarter of 2022. He had around $19 million in Booking, $18 million in Alphabet, and $18 million in Meta, among other multi-million-dollar holdings. He sold all of those holdings in the second quarter. Not one was spared. To say the least, the move was a big shock. The adjustments, however, came as no surprise to those who follow Burry's cryptic tweets. He also said that the market sell-off was just halfway through despite the fact that the S&P 500 was already down more than 20%. The Burry bear argument, as far as one can tell from his tweets, is based on solid business and finance fundamentals. Burry argues that, although inventory output may cause disinflation in the medium run, higher than usual inflation will continue in the long term, driven by chronic commodity and labor shortages. Furthermore, he argues that inadequate U.S. government policies will amplify the negative economic effects of high inflation. As a consequence, the United States economy will enter a serious recession. Burry believes that the severe recession would result in a huge decline in corporate earnings that is yet to be priced into equities. Burry feels certain securities will crash as corporate earnings fall over the next year. That, in a nutshell, is the Burry bear theory, or at least our understanding of it based on a jumble of his always cryptic tweets. Essentially, Michael Burry does not think inflation will fall. As a consequence, he believes equities are doomed. Well, not all of them. There are always winners in a big shakeup, and Burry has a nose for finding them. Chapter 3. Betting on a Recession? Last quarter, Burry purchased almost 500,000 shares of the Geo Group. What exactly is going on here? Burry, it seems, is going all in on the U.S. economy is screwed theory. You see, if the recession ends up being extremely bad, naturally, jobless rates will skyrocket. If people's income dries up, crime is likely to rise as a result, at least in some areas of the U.S. Burry's wager on Geo Group seems to be that incarcerations are bound to climb as the U.S. economy collapses. Another aspect of the wager might be political in nature. The former U.S. President Donald Trump advocated for private prisons, and funding on private prisons increased throughout the Trump administration. Indeed, Geo stock more than quadrupled during Trump's first 2 months in office. Perhaps a potential Republican victory in 2024 could do the same for the company. Chapter 4. Burry doubles down. Now, in case you're wondering if anything has changed in Burry's prison calculus since last quarter, indeed there has. He's tripled down. Burry's hedge fund has expanded its stake in Geo Group to more than 2 million shares. That's more than a 3x increase from his initial investment. Now, Michael Burry has piled up on yet another jail stock, according to a fresh batch of documents just revealed. Core Civic, a private prison operator, has been added to Burry's Scion Asset Management. Both stocks are now up more than 4% in the New York Stock Exchange as a result of this news. Core Civic is back in Michael Burry's portfolio 6 months after he sold his previous holding in the prison business. Core Civic was initially introduced in Scion Asset's portfolio in the fourth quarter of 2020, becoming the fund's biggest non-options position in the first quarter of last year, but accounting for just a tiny portion of the portfolio's total value. Revenue from the prison firm is expected to fall for the third consecutive year, while gross profit and operating income are expected to fall this year compared to last. However, the company's net income has increased significantly this year. Core Civic was forced to cut its adjusted earnings per share expectations in August, citing a delay in the repeal of Title 42, which was expected to increase the number of asylum seekers held by ICE, the company's biggest government client. Between 2015 and 2020, hedge fund ownership in Core Civic was as erratic as the company's share price, but it has since steadied when shares bottomed out in the fourth quarter of 2020. They've gained 84% since then, including being one of the few companies to gain 8.88% in 2022. Citadel Investment, managed by Ken Griffin, doubled its holdings in Core Civic by more than 1.56 million shares in the third quarter. Surprisingly, Burry financed his position in jails in the second quarter by selling other holdings. Mr. Big Short looks to be adopting a highly defensive stance, moving away from IT businesses such as Meta Platforms. Both Core Civic and Geo Group have outperformed the markets this year by a large margin, indicating that these wagers are paying off in spades. But Burry isn't just anticipating a boom in the prison population. During the third quarter, Burry added Aerojet Rocketdyne, Charter Communications, and telecoms business Liberty Latin America. Scion also acquired a fresh 5 million share holding in media firm Curate Retail, which gained 6.25% on the news. You've heard of the Oprah effect. Well, call this guy the Burry effect. At the close of the quarter, Curate and Geo were Scion's two biggest assets in terms of market value. Now let's take a step back and think about how investors should interpret this news. Chapter 5. Michael Burry, human after all. Michael Burry is a living legend. He is an indispensable genius and financial industry expert. And when the market is tumbling, he's the one to turn to. Having said that, he's still mortal and fallible. Although Burry runs a popular Twitter account, he doesn't have a crystal ball telling him the direction of markets in the next months or years. He, like the rest of us, relies on research, arithmetic, and reasoning to predict where stocks will go. And his predictions of a market meltdown haven't always been as accurate as they were in 2008. For example, in 2017, Burry predicted a stock market meltdown that never happened. Whenever investors like or hate how the U.S. jail system is operated, it's a huge business. According to Michael Burry, it is one of the most recession-proof sectors of the economy. Perhaps this is the sector to concentrate on if you share Burry's pessimistic view. Given the tenacity of government contracts with jail operators, these businesses do have what Warren Buffett calls moats. Big barriers keep out competitors. In this industry, the entrance barriers are high. As a result, organizations such as Core Civic and Geo Group are ideally positioned to generate stable cash flows in depressed markets. These are businesses that have had their share of problems in the past. Despite the fact that these companies seem to be relatively affordable, valuation multiples have stayed low. So, many investors have long regarded such companies as value traps. Having said that, with Michael Burry putting a large bet here, many will certainly follow. These are two stocks to watch right now if you want to ride his coattails. Is Burry on the money once again? Or is Dr. Doom gone over the deep end with his bleak view of the future? Please share any thoughts or opinions below in the comments. They always generate an interesting conversation. And if you found this video interesting or useful, show your appreciation by liking this video. It really helps the channel reach new people. As always, thanks for watching. Until next time.